Thank you for joining me. So what's the primary, the difficult issue here, I guess, is proving that any of these senators explicitly traded on inside information, because unless they have that information on this phone, right, they're probably going to be able to say, I did it off public reports, or in the case of Feinstein and Loeffler, my broker did it and I had no knowledge of it.
Well, that really is the challenge, Kelly, that you hit it on the head, and that is in a traditional insider trading case, what we usually have is you have a major announcement by a company that has a market impact, and you can identify the information that itself is confidential and where there was the breach of the duty, the use of that material non-public information. Here, it's not as if there hasn't been information in the public domain prior to their trading. I think what's really interesting here is the size of the trades, the timing of the trades, and it does implicate issues about the speech and debate clause, which to me is somewhat of a distraction because while the government, both the SEC and DOJ, will not be able to get into what was actually discussed within committee, the fact remains, most insider trading cases turn on circumstantial evidence, basically piecing together the timing of the trades in the context of meetings, of contact, of information that was available,
right,
and the trades themselves.
But as you've said, this one is different and possibly trickier because unlike, I believe Collins, right, who was the last major insider trading case, that was a more clear-cut instance of a specific company being referenced. In this case, we're talking about selling a basket of stocks because of a macro event.
No question about it. And again, there were a lot of investigations around 9/11. There were investigations around around what we'll call the market collapse, in the 2007, 8, 9. But here we're really talking about a market event. So it's going to make the proof component more difficult for the government. And I think the Collins case is actually very different because the Collins case involved his service on the board of directors and his having specific knowledge regarding failed clinical tests. Here we're talking to something much more global around the pandemic itself and the briefings. But I think the fundamental message here, and this was something that the co-heads of the co-directors of the SEC Enforcement Division said several weeks ago, and that is, people who are taking advantage of inside information, which could include members of Congress during the pandemic, will be subject to investigation, will be the subject of cases.
Sure,
so
yeah.
If anything, what we have here is evidence that the government really is pushing forward hard.
No, of course. Especially in a situation like this. I wonder if this one is going to come down to, as you mentioned, the stockbroker who executed trades for Burr and whether he told others to sell, even if the information was only that Senator Burr sold, if that itself has some importance and if it's allowed to be shared or not. And separately, this issue about his brother-in-law, who also made stock sales on the same day, and if Senator Burr told him or they talked about doing so, again, would the burden fall on proving that he told him to sell because he had inside information? Because I imagine just telling him to sell because he says, hey, coronavirus is really bad, probably doesn't rise to the level.
Kelly, great question. And I think one of the subtle differences, without getting too much into laws, is the difference between the traditional insider trading prosecuted as 10B fraud and insider trading prosecuted as securities fraud under a new securities fraud statute that came out in Sarbanes-Oxley, which is Title 18, the criminal statute 1348. I'm not going to get granular on that, but there has been a conviction that's been affirmed by the Second Circuit, meaning the circuit that supervises cases out of the Southern District of New York, that really is always out in front when it comes to securities prosecutions. And to me, this is almost much more analogous to Martha Stewart, in the sense that you had a broker who told Martha Stewart what the CEO of ImClone had been doing. Here, the fact that we now have information about the brother-in-law trading, the SEC can look at all of the activity in Senator Burr's brokers' client accounts. While there may be an inability of the government to access the communications to which Senator Burr himself was a party, that does not apply to the brother-in-law. That does not apply to the broker. So there are a lot of avenues for discovery that could ultimately result in a prosecution or prosecutions.
Interesting.
So back to your, fundamentally back to your question, while the proof itself to pull together may be a little bit more difficult, circumstantial evidence may nevertheless be compelling.
Well, you know this stuff through and through. Jacob Frenkel, thanks for joining me to explain how it may evolve. Appreciate it.